So here we have the S&P on the daily time frame, and the head and shoulders top is still valid. Remember, it took nearly 3.5 months to form. All prices are doing at this point, they're rallying back up to the neckline of the pattern, and I do fully expect that after this gives way, which I think we're coming very, very close to a top here, it's possible that next week we may even put in like a narrow range candlestick, like a doji or a hammer before this is done and we roll back over. Panic will set in this marketplace and break these June 4th lows. But I do not expect prices to go below the October low. I think we're probably going to set up something more along the lines of around the 11.5, 11.2 area on the S&P, and then from there we'll probably just base around, continue like this before we ultimately go up and surpass these 1422 highs. Remember, this is still a bull market. We are not in a bear market. Prices would not have continued like this for as long as they have if this was a bear market. Most of the time in bear markets, what you see is a rally all at once that happens, and it's short-lived, and then you see the resumption of the bear come in play. This has been somewhat strong in terms of the performance and price, but the internals of the market are saying the complete opposite. They're saying that it's actually very unhealthy and very weak. Gold, take a look at the daily chart I have here. For the last year, pretty much we've done nothing. We've gone sideways, and yet people continue to come out and say gold 5,000, gold 10,000, and beyond. And folks, that's not going to happen in only a year's worth of a correction. We need to see a much larger correction unfold, and take a look at this particular support level. Each time that prices get to roughly about the 1530 level, you see a substantial rally follow. And again, you saw it here. Prices went always just about as high as that previous peak, but now we have a similar situation, but a totally different development. And we're down at this level, sure, but prices are actually crawling, and they're not going really anywhere. And that to me says that this particular support level is actually wearing thin, and there are not as many buyers here as there were previously. So it would not surprise me for the short term to see maybe a rally a little bit, but I do believe that the longer term direction is to the downside, at least, well, for the intermediate term in that sense. And first I would be watching roughly the 1500 level, and then to as low as 1440 before the next support holds. Now silver's obviously going to do what gold does, and take a look at this chart here. Again, we have the same scenario. We're crawling at this particular support level, but if gold gives way, silver could drop to as low as 20 bucks. I mean, there's a small little consolidation here from October of 2010, but I think that's only just a speed bump on the way down. I mean, silver could go all the way down to about 1920 again, and I mean, just look at that. Looks like it's on the verge of a cliff right now. If we drop, man, it's going to drop pretty nasty, and it could almost be something similar to this all over again. And here we have the US dollar. I pulled this back on a weekly chart. Clearly, this thing is in an uptrend, and yet, again, you have people every day or every week come out and say that we've topped and the dollar is going to continue lower, and because of that, gold and silver are going to fly. I just showed you why we're probably not going to see that scenario unfold. It's finding support each time and time again at this trend line, and usually when you see this kind of huge move like this, like 1, 2, 3, 4, 5 weeks of just pure upside, it's natural to undergo a consolidation before the next up leg. I ultimately see the dollar going back up to probably about 85 minimum. We could see it in the 87. This is really the next minor resistance level, but it's natural to see a consolidation after a huge move up. I mean, we've seen that time and time again. Look, we've had this entire up leg, we consolidated, we've gone higher again, and now we're doing the same thing. That's natural, and that's healthy. So I would say that if we were to continue higher and higher, similar to like this, where we just went parabolic, that would have me more convinced that Bernanke would then come out and have to implement a bailout package of some kind to prevent this current deflationary period that we're going through.